Welcome in, folks. I have some good news for you. Some, let's say, bullish news that I have to share with you here at the top of the video. Hope you guys enjoy that. Then we're going to get into 3 reaction videos here today. First one up here, Apple's new iPhone sales jump in China. Very important subject. Apple's sales in China have not been strong of recent, as in the past year or so. So looking forward to reacting to that one. Then I want to get into this one. Dan Ives talking about big tech earnings, his expectations here, kind of share my opinions and perspectives. Do I think he's right in regards to some of these stocks climbing after their earnings are announced? Meta, Nvidia, all those big guys, Apple, those sorts of companies, right? And then this last video, earnings expectations are way too low, and markets will swing higher, says this gentleman from HSBC. So I think that's a pretty interesting subject to go ahead and react to. Appreciate y'all joining me as always. Thank you so much for being here. Thank you for smashing that thumbs up button. Thank you for being subscribed to the channel. New all-time high subscribers in the history channel. Appreciate each and every one of you for being here. Pin comment down there today if you're looking to access all my premium courses, access my private group's Discord chat with the 6- and 7-figure members, access to my stocks I'm buying and selling, which I made a bunch of moves here today in my Fidelity account, and access to 1000xstocks.com. If you want access to all that, click the pin comment down there, apply to join my private stock group and get access to 1000x, and we'll see if we can get you access maybe next week or something like that, okay? All right, guys, so first piece of good news up here is crude oil is doing absolutely nothing. And that's phenomenal. So in the past year, oil's gone down about 20%. Now, this bodes very well for inflation numbers over this next 6 to 9 months. This doesn't mean anything in terms of inflation 2 years from now or 3 years from now, but for the next 6 to 9 months, this is phenomenal, absolutely phenomenal. Because now we're in a situation where even if oil prices start climbing back, let's say in 2025, right, and it goes to $80 or $90, that's still not really an issue. Like, we're going to have some sort of massive bull market in regards to oil to really cause any problems with inflation. So that's very, very good to kind of see prices at a lower place, especially with unemployment rate in the 4s right now, right? Now, additionally, if you look at GSG, the commodity index in general, that's down 5+% in the past year as well. And so that is, basically inflation numbers are going to be great for the next 6 to 9 months. When I say great, I mean around 2% or maybe even under 2% some months. One of the main reasons that no one really talks about on why we had basically the most ridiculous inflation we had in decades was we had the most insane bull run in commodities pretty much in history. And that started right after Rona got over. Well, I don't want to say Rona got over, right? Because it never technically got over. But once the biggest fear around Rona got over, which was around April, May of 2020, that next 2-year bull cycle for the next 2 years, the next 24 months was something we'd never seen before. And that caused massive issues when it came to inflation, and the commodities went insane. And at the end of the day, what does everything come back to? What is everything made out of, right? It all comes back to commodities. So when you have commodities become an issue, you're going to have inflation become an issue. So the next 6 to 9 months when it comes to inflation are looking phenomenal, okay? Second piece of good news is Netflix. They're the first big tech company to report earnings this earnings season. And guess what? They did very, very well. They started things off, by the way. Look at that crash in Netflix. That was the 2022 crash there, and look at it. It's gotten it all back and then some. I mean, my gosh. Under $200. That was crazy for Netflix, right? But stock's up over 11% here today. When you go ahead and you take a peek at their earnings, it's phenomenal. A- income statement here. Revenues was up $9.8 billion from 8.5, so they increased revenue $1.3 billion year over year. Cost of revenues went up, but it didn't go up that substantially. It was up around 200 mil, a little less than 200 mil year over year. Marketing was up, but nothing crazy there. That was less than $100 million up. Technology and development was up. That was less than $100 million up number, right? And remember, revenues were up $1.3 billion. G&A was down for the company significantly over year, so general administrative is looking phenomenal for the company. Operating income $2.9 billion versus $1.9 billion. They increased operating income $1 billion year over year. It's incredible. Interest expense was a little bit of an issue for them, but nothing too crazy. Net income $2.3 billion from $1.6 billion previous year. Oh my gosh! I mean, just banger numbers from Netflix overall. Absolutely absolutely phenomenal when it comes to Netflix, and a great start to earnings season overall here. Okay, next one up here. So election, right? That's now, 2.5 weeks away or so? It's coming up very soon here. So as far in, I believe some states have already started doing some mail-in ballots and some of those sorts of things, I believe. So technically, the election's already kind of getting up and rolling, and basically now, right? So in regards to that, Trump's obviously come back epically in regards to, kind of the polls, right? Now, polls, at least in recent times, last couple of elections, I noticed kind of lean a little heavier Dem than the reality is. And so whenever you look at the poll numbers, I would kind of think like Trump's probably doing better than what's expected out there, right? Now, in regards to betting markets, like people actually placing money on this because it's America, you could bet on everything, right? And people do bet on the election. Trump's definitely taking a bigger and bigger advantage over Harris here. Now, that matters because the market wants Trump for this particular election. They also want they also don't want anybody to take too much control. So they want the House, the Senate, they want those to be split. Yeah, but at the end of the day, the market does want Trump more than it wants Harris. And so this could be seen as a positive overall for the market here. Now, as far as you personally, don't get too bullish on, let's say Trump wins. Don't feel like over the moon bullish. Because I think there's a lot of people that can kind of get into that mindset of like thinking like a president makes all the difference in the world and it's going to change everything and like the stock market's going to boom. It doesn't always work that way. So I'm just trying to warn people out there. If Trump does win, there's going to be a lot of people that are probably going to go to that mentality of like super bold up and like just, euphoria high. Don't go there, okay? Just trust me on that, okay? Now, strong discretionary spending buoys U.S. retail sales in September. So as far as retail sales in September, this came out yesterday, that was also good as well, which is good news overall. Weekly jobless claims fell 19,000, so which is also good news. So overall, I would look at this and I would say good news here. Now, keep in mind in regards to the consumer, you're going to see the consumer come back pretty strong, in my opinion, in 2025 specifically. And the reason being is coming off a very weak year, a lot of these companies are going to have very easy comps to comp against in 2025, and the consumer didn't get sliced and diced by inflation in 2024 like they did in 23, in 22, which sets up the consumer stronger for 25. Jobs are still plentiful. We're still at an unemployment rate in the 4s right now, right? Wages should be still in a very good place, so you should see real wages actually pick up significantly for the next, I would say, at least 6 to 9 months, which once again, it's very, very good news for retail sales overall. So I think you'll see a lot of these big companies report much better numbers in 2025 than they did in 2024, right? Alrighty, so next up here, let's get into Apple's new iPhone sales in China.
Tuesday's all-time high as new data suggests those iPhone sales in China are doing better than expected. Steve Kovac is here with the details. Well, Steve, do tell.
I'll give you a caveat here in a minute, but first let me tell you what's going on here, Kelly. Counterpoint Research is out with this report today saying iPhone sales were up 20% year on year in China for those first couple weeks of iPhone 16 sales, and the growth was especially coming from the expensive Pro models. Now, I don't have to tell you, of course, that China is Apple's second most important market outside the U.S. and can account for nearly a fifth of all of its sales. And Apple's China business has been pretty crummy coming out of COVID the last couple of years, as that economy has been slower to recover. And the iPhone 15 cycle last time underperformed in China. That might be until now. However, one caveat here, Kelly, I'll note that Counterpoint has been wrong before on Apple's China sales. Back in April, I was right here with you, and they were warning that iPhone sales dropped 19% in the first 3 months of the year. It wasn't quite that dramatic. Apple reported overall China sales were down 8% for that period. That includes everything and including iPhone. This all comes as we play the guessing game for what iPhone 16 demand actually looks like. We've seen so many analyst notes over the last few weeks showing overall demand based on shipping times for online iPhone 16 orders appears to be muted so far, at least.
I have the new iPhone 16 Pro Max. I bought it and I upgraded from my iPhone 14 Pro Max. And one of the things I noticed about it is when you get the new iPhone, you have to get the new software. And I noticed there was quite a few bugs in relation to several things. A few things have been fixed already, which is good, but there's definitely was buggy. And that's why I hate, the moral of the story is whenever Apple launches a new software, never get it in the first month or two. Wait several months till they get all the bugs out. The other thing I noticed is the phone doesn't feel nearly as premium as my 14 Pro Max. The 14 Pro Max was like this steel, premium feeling phone. And the new phone just feels a little light. It feels a little not as premium, I guess you can say. So just a little thing I noticed. And also the size difference. hardly anything. Like, I don't even notice a size difference. Like, it's supposed to be technically a little bit bigger. What she said is not much bigger.
The iPhone 15 cycle. And of course, we're still waiting to see how the Apple Intelligence launch coming in a software update by the end of the month impacts that demand picture. Stay tuned, Kelly, because we're going to get some fresh color from Apple itself when it reports earnings in less than 2 weeks. That's October 31st.
On Halloween. Okay,
yes,
that answers
spooky.
my question.
Hopefully it's not too spooky for them.
Exactly, which is when are we going to know for sure? So what do we know for sure about iPhone 16 sales right now, both in the U.S. and in China?
Yeah, what we can look at least the hardest data we have, and it's not the best, but it's the only data we have, is when you go on apple.com right now and you say, I want the iPhone 16 Pro Max, and it says, okay, it's going to come in 27 days or something like that. So the analysts look at those ship windows and compare them to what they were last year. The idea being, if the ship windows are long, then demand is great. If the shipping windows are shorter than they were last year, demand is worse. Others are pointing out, well, maybe supply is better this year. Maybe people are just waiting an extra few weeks for that Apple Intelligence launch, which is going to come by the end of this month. We just don't know. This is a really funky cycle to try to keep up with engaged demand. So really going to hinge on when Tim Cook reports earnings here in a couple weeks. What does he say as far as that first week of sales? What does that look like? And then any forward-looking guidance, what they're seeing the demand-wise, especially in China, especially here in the U.S.
I take it as a data point that the stock itself is back to all-time highs.
Yeah.
So it would tell you, okay,
there's excitement around it.
There's excitement, maybe, whether it is or isn't by a fraction here or there, who knows, but that it's enough. It reminds me a little bit of the Netflix pivot that's happening.
Exactly.
Is it the actual device count, or is it just that the company is firing it well enough?
Netflix is taking a page from what Apple did several years ago. Apple said, we're not going to disclose how many literal iPhones we sell. We're just going to do the bucket of revenue that we make from iPhone. Exact same thing we're seeing from Netflix. The idea being it's so much more than this one thing. It's so much more than the number of phones we sell.
Exactly.
It's the type of phone and the average selling price. So many things.
It reminds me, Jamie Dimon was also frustrated on the JP Morgan earnings call because he said, stop fixating on the net interest income number.
Exactly.
Stop trying to just plug it into your model so that you can, come out with a share price.
Out of these things.
Exactly.
Apple did a pretty good job over the last few years doing that.
All right, Steve, thank you very much. Steve Kovac.
Yeah, the bottom line is, in regards to Apple, it's a very similar story to many of these consumer companies. The Starbuckses and Nikes and so many of these big global companies that do business all over the globe, right? The bottom line is a lot of them set up a lot better in 25 than 24 because the consumer is going to be in a better place in 25 than they were in 24, right? And so, after 25, we'll see what happens there, but a lot of them set up a lot better. When we talk about China should be in a lot better place, especially with their customer base in 2025 than in 2024, right? With all the stimulus measures they're doing there and, just kind of things getting back to normal in regards to China. So China, I would say I'm much more bullish on for 2025 than I was for 2024. And then if we talk about America, certainly, which is always going to be Apple's most important market, and many of these big companies, right? Consumers looking much better for 25 than 24. So overall, the same thing in Europe as well. So overall, I think that's going to be there's a higher probability people are going to buy these sorts of things in 2025 than there was in 2024, right? Because you're not coming off of that year of just insane inflation like you had in 23 and then certainly in 2022. So the bottom line is in 2024, not everybody could afford a new iPhone. Not everybody could afford a new pair of Jordans or another Frappuccino and those sorts of things. And so it just really hit these companies' numbers hard. But don't be surprised at all if, and don't think like these companies magically fixed things, right? In regards to their business models. It's just like if people have the money, they'll go spend. We know that. It doesn't matter if it's America, China, Europe. If people got money, they're going to go spend the money. If they don't have the money, they can't go buy the new iPhone. They can't go buy the new pair of Nikes, right? This is bottom line in regards to that. Dan Nides on Apple's growth in China and big tech earnings.
You've also just come back from doing some channel checks in Asia. Are you seeing that same sort of enthusiasm over Apple?
I mean, this is so consistent with what we've seen. The renaissance of growth has begun for Apple with iPhone 16. I think China, look, that was the biggest issue. That was a headwind. Now it's a tailwind. They have mojo going into the next, I think, 6 to 9 months. And that's why, look, a lot of the bears, they've yelled fire in a crowded theater for the last month. But I think they go back into hibernation mode, in our opinion.
Well, they've been yelling fire, Dan, because it's a Chinese economy that's been looking weaker. It's a lot of competition. And that was the reason so many people have said this launch maybe will disappoint and it doesn't have the full AI capacity. Sure. So why didn't it disappoint?
Yeah, well, first, you have 100 million iPhones in China in a window of an upgrade opportunity. I also think the climate there, and we've seen it firsthand, it's definitely much tamer than a year ago, where really the U.S.-China cold tech war, I think, was front and center. The other thing is, it's the best product out there. I mean, if you look right now, the new Huawei phone, I'd say that's the equivalent of essentially an iPhone 14. So when you look at iPhone 16, this is globally going to be the start of an AI-driven supercycle. And again, a lot of those features get rolled out, called over the next few months. I think it's going to be a monster December quarter. I think that's why 6 months from now, we're looking at a $4 trillion market cap for Apple.
Wait, so are you saying that Apple's going to be able to take market share back from some of the homegrown heroes, from the Huaweis of the world?
Oh, yeah. I mean, look, they've gained, call it 300 bips of market share in China over the last 18 months. I think they gain another, call it 100, 150 bips of market share over the next year. And that's going to be very important because China is the hearts and lungs of the Apple growth story. And I continue to kind of handhold investors that this is the beginning of a renaissance of growth in Cupertino. And this data just further supports what we've been seeing in Asia firsthand.
Dan, we're also a few weeks away from just the big tech earnings in general. Just looking at some of the data from what we've had earnings so far, Microsoft, Amazon, Alphabet, Meta, $106 billion in CapEx in first half, almost 50% higher year over year. Most of that going towards NVIDIA and chips. Do you expect this earnings to hear that type of spending continuing at a similar pace?
I think for bulls, get the popcorn ready. As those calls start. Because everything we see, it's going to be a robust tech earnings season. I think Netflix kicked it off.
Yeah.
It's because of AI. You have $1 trillion of CapEx. And now, obviously, that's led by Godfather of AI, Jensen, NVIDIA. But I think what we see, not just from NVIDIA, but what we're going to see from the hyperscale players, Microsoft, Google, Amazon. I think software is going to be strong across the board. Cybersecurity. I think tech rips higher going into year end. Clearly, election.
Yeah, one of the big techs I feel the best about going into this earnings season is Amazon. Feel really good about Amazon. I think e-commerce is going to be looking really good, especially as consumer continues to come back over this next 6 to 9 months here. And I think AWS growth is going to be pretty dang good as well. And then their advertising business continues to boom for them. I notice they're pushing heavy, a lot of promoted products. That's a lot of their first search results. Seems heavier than ever when I go on Amazon. So yeah, I overall, I definitely think Amazon's looking pretty dang good for this earnings season.
Some volatility, white knuckles. I think 20,000, we're going to be looking at 20K Nasdaq. That's going to be the conversation over the next 3 months.
So if the bulls are eating popcorn, it sounds like the bears might need something a little bit stronger, considering what you're saying. Okay, but there is this risk of an election, and not just an election, but candidates that seem to have both pursuing antitrust policies. Google's a great example of this, and I know you've written a lot about it. They're under the cloud of the U.S. government trying to break it up. Do we see a Google that's maybe more reticent to spend, to make big CapEx plans, if there is this threat looming over them?
Look, in terms of antitrust, and obviously a huge overhang on Google, I mean, we saw a cover of Microsoft late 90s, 2000. Like, that is the precedent. I think Google, they learned from Microsoft's mistakes. They're not going to hold back. I think actually it's the opposite. They will double down. They'll fight this in court for years. There will be business model tweaks, but I believe very low chance of any sort of breakup happening. And I think Google, in my opinion, is probably the biggest risk reward in terms of as a large cap tech stock. I think 30, 48 hours upside here in terms of what we see, just even on some of this antitrust overhang.
So antitrust overhang happens, and unlike Microsoft, which kind of pulled back after some of the action against them in 2000, you think Google's going to go full force into things like AI and that sort of thing, even with this threat?
It's a Game of Thrones. It's a battle right now in big tech. They can't just hold back because of this. And also look at Apple and others. It's not just Google that's under scrutiny. Gates' biggest regret from Microsoft was holding back spending in that period. Other big tech players have learned there, but we are still a 1995, almost 1996 moment for tech, not a 1999 bubble moment. I think that's what's going to continue to play out going into not just year-end, but 2025.
What did you make then of the Bloomberg reporting earlier this week that Qualcomm was kind of pumping the brakes on looking at Intel to take it over until the election happens and uncertainty there?
I mean, being tied to Intel, it's a nightmare on Elm Street. So the last thing you want to be in this market is tied to Intel. Even on the ASML and everything else, look at TSMC. Look at Godfather of AI, Jensen, NVIDIA. You wouldn't be tied into the left lane, the Bugattis going 90 miles.
Yeah, TSMC also looked really, really good there.
Not the minivans 45 miles an hour in the right lane.
So what, it's just an excuse to kind of back off of Intel? It has nothing to do with politics? Is that what you're saying?
I mean, I'm just saying right now, you do not want to be tied to Intel in this market.
You mentioned ASML and TSMC. It's so funny how this narrative has been so whipsawed this week. ASML comes out and it's doom and gloom and maybe the chip boom isn't as big. TSMC completely blows that narrative out of the water. What do you make of the divergence between the two? Were we just misreading what we heard from ASML?
I was shocked. We talked about when ASML hit. That to me, that's more legacy on chip side related to Intel. The fact that the AI names were down there, I mean, that was a gift. You look at TSMC, that's the indicator. And I think, look, right from Asia, demand to supply, 15-to-1 demand to supply. And I think that is just not just positive for NVIDIA, it's positive for AMD and others. But I think that's why in this market, you got to be careful in terms of some of the reads.
And in this market that is volatile off of some of these things, does that tell you, Dan, that there's still some weak hands in these stocks, that there's still some nervy investors here that can kind of run for the exits on signs that, as you point out, might not be as telling as they are?
Yeah, I think that's a great question, because I think you're definitely seeing that.
Yeah.
Any sort of nervousness, some white knuckles, head for the elevators. But what we've seen over the last year and a half, 2 years, is that a very similar sort of, I think chapter play out. But it is 9 p.m., almost 9:30, in the AI party. That goes to 4 a.m. I'm not saying in the midst the DJ stops playing music, there's glass on the dance floor, but this is a party. I think it's really unprecedented in the last 40 years.
With lots of popcorn at it.
Popcorn is what you get ready for those earnings call with tech coming up.
Yeah, so in terms of big tech, kind of thinking about some of those companies and how I'm feeling going into these, bunch of earnings here and how I'm feeling about those sorts of companies, right? I feel really great about Amazon. I feel great about Meta as well. I think Meta sets up very well for beats, raises. I think Amazon as well, beats and raises. When it comes to some of the other ones, right? Celsius is such a funny stock right now. I don't trust any rallies in regards to Celsius. It's just up and down and all around. In regards to some of the other big techs, I think Microsoft earnings will be fine, as they always are. I think Apple's earnings will be fine. I'm not expecting a huge move from Apple or Microsoft. Google, I think they'll be fine. They just still have the government's overhang going on in terms of that, right? NVIDIA is going to be a banger. I think they're going to double beat. And then I think they're going to kill their guide as well. So I think they're set up really, really well for maybe one last hurrah bull rally there. That's going to be pretty epic. And then who am I forgetting? Oh, Tesla. Tesla, I think, is actually somewhat promising. I think the story's getting better in regards to Tesla, and I think we could be looking at a Tesla here where, the numbers start getting better. The earnings per share start getting better. The margins are getting better, revenue and everything. And so Tesla, I'm not super optimistic on Tesla in the short term, but I'm getting more optimistic on kind of the short term in regards to Tesla, right? Alrighty, next one up here. Earnings expectations are way too low, and markets will swing higher.
S&P could hit 6,000 before the election. Joining us now is HSBC Chief Multi-Asset Strategist Max Kentner. So you see the good times going here. Why?
Yeah, good morning. The good times still rolling. I think when we look at the earnings expectations for the S&P 500, when we exclude the seasonal bump in utilities, for example, actually consensus expects earnings to contract quarter on quarter in the third quarter. In a quarter where, for example, the Atlanta Fed's GDP now is saying that real growth has probably been 3.5%. So we're talking sort of nominal GDP growth around 6% most likely in the third quarter. And yet consensus expectations are for a sequential decline in earnings expectations. So in other words, put it simply, earnings expectations are way, way, way too low, way too pessimistic. And I do think that means the next couple of weeks, a bit of an upswing, particularly driven by the cyclicals and stocks, a bit of the reversal of what we had in Q3, not buying the bond proxies, not buying the defensives, but really rotating into these cyclically and economically sensitive stocks.
I'm just thinking about what could go wrong in this kind of very benign economic environment, Max, and that is we've seen this creep up in bond yields as the economy has come in strong, so that's good news, but not good news if you were hoping and praying for Fed rate cuts, which
might start to get more priced out.
Yeah, 100%. I think for now, it's still the good kind of reflation. For now, it's still the good kind of increase in yields. There will come a point, I think, where that will flip, just like we had in April this year, just like we had in the fourth quarter last year. Remember sort of September, October last year when yields hit 5% on the 10-year, or like we had a couple episodes in 2022. The point now is we need to try to figure out really that threshold, that point when it starts to become painful for equities, for credit spreads, for emerging.
Expecting 2 more rate cuts this year, 25 basis points each. I'm not there. I expect 1 more rate cut this year, 25 basis points. So we definitely disagree there. S&P could hit 6,000 before the election. I mean, that's only 2.5 weeks from now, right? Okay, let's just throw darts at a dartboard there. U.S. is absolutely not heading into a recession. Well, yeah, I would say the next, 6 to 9 months look pretty good, but I think there's still question marks about 26, 27, what happens there. Keep an eye on home building numbers. That's going to tell you if some problems are going to come down the road or not. So, yeah, we're looking good in the short term, right? The short term's looking good. Unemployment's in the 4s. Real wages are picking up. I think that should be good for spend for the next 6 to 9 months. So, in the very short term, I think we're still good here, right? But yeah, the jury's still out on soft landing or not.
It's really for risk assets across the board. Now, we do think is what we call the danger zone. We analyzed that at the start of the year, and we do think that is more likely around 440 to 450 in the 10 years. So there is still around 35, 40 bips to go until really that pain zone, that threshold where really it will start to suffer until that really arrives. So there's an awful lot of room still really for equities to go higher until valuations will start to feel a pinch.
Coming into October, Max, one of the running themes was that people would start putting in hedges, trying to manage election volatility. VIX almost back to 18 today. It's going to be the lows for the month. Is everything already in place?
Yeah, I think everything is in place. In fact, I think I would argue part of the reason why we were, and we still are so bullish, particularly on U.S. equities, is because sentiment and positioning are still low, right? Just like you were saying, the narrative was, we had all this carry trade unwound in August, and, the labor market was signaling a recession. On the back of that, people were de-risking, they were degrossing their equity risk, they were really getting out of equities, out of risk assets, going into duration, going into buying treasuries, into buying bonds, and really fleeing for safety there. And then obviously we had this narrative around weak September and October seasonality, perhaps exacerbated by election uncertainty. We never really bought into that because sentiment and positioning as a result of all these worries continues to be really low. And as a result, the equity market just continues to climb that wall of worry. And I think just to give you a number, when we look at our own sentiment and positioning indicators, which is an aggregate of 19 different measures, that still on aggregate is closer to a buy signal at the moment. It's closer to a buy signal than a sell signal, even though we've got the S&P at an all-time high. Absolutely nuts. That's crazy. We've never seen that before, at least not since we've been tracking that sort of aggregate sentiment indicator. Despite an all-time high, we're still closer to a buy signal. That's not the time where you want to be throwing in the towel.
So in terms of what stocks have still major upside ahead in this market, my opinion is where the real biggest opportunity. So first off, big tech. Let's talk about big tech. Big tech, I think, still has some upside potential over this next, we can call it 6 months or so, 6 to 9 months or whatever. Those stocks, I would put a lot of them in either the 5% to 25% category, meaning like some of those stocks I think might move maybe upside of 5%, maybe into the 10% range over the next 6 to 9 months. And there's others that I think are going to move more in that 20 to 25% range over this next number of months, right? So big tech is not the biggest opportunity. Even for some of those stocks, I expect to actually move quite heavily over the next few months. The biggest opportunities, in my opinion, are Russell 2000. I think smalls are definitely positioning well, especially if Trump wins. I think I think there's going to be a lot of euphoria around Russell. So I think those ones still have a lot of fun to be had. And then a lot of the dividend and value stocks, that have been laggers for the last several years, just to be quite frank, I think there's a lot of upside momentum in those names. I think you'll see stocks like Nike, which is a stock I'm buying heavily right now, right, come back to life in a major way. I think PayPal has a lot of room to run. I think SoFi has a lot of room to run, as there's kind of a better feeling out there in regards to consumer being in a better spot, right? Because we're such a consumer-driven economy. So when the consumer is getting nailed, there's a very bad sentiment out there, right? But when the consumer is feeling a little better, there's definitely a better feeling out there, right? So, I think it matters. I think the election matters actually a lot to the market in the short term. I think if Trump wins, that matters significantly to the market in the short term. There's just a clear difference in how people view Trump versus Harris in regards to economics, right? And so if you're talking about like even people that are a little more maybe on the Harris side, even a lot of those folks, even though they might not want Trump because of some other things, right? They kind of look at him and feel more comfortable economically, right? And there's just a better feeling there from a money standpoint, right? Business standpoint. So, yeah, well, we'll see how it all shakes out. But, the short term looks kind of okay here. But, I think there's still, everybody wants to crown it soft landing. We don't know yet. We haven't reached that stage. The Fed just cut for the first time. You can't call a soft landing or not a soft landing until the Fed's done many cuts, until the Fed, until you're at least a year to 2 years out from the first cuts. Then we'll know. Talk to me in 2026 and we can call it a soft landing or not a soft landing, right? Keep a very close eye over this next year on new home order numbers from Toll Brothers and all the other home builders. How are those numbers looking? Very important next earnings season for those companies, right? And then, mortgage rates have gone up recently. That's not good. And I'm seeing more inventory start to pile up in regards to the housing market, which could lead to actually deflation in the housing market, which is another thing that's good for the consumer. But if suddenly you have home orders dry up, that's going to hurt the economy significantly, way more than a lot of people realize. And that's where I start to kind of figure out like, could the economy be in some trouble maybe 26, 27? But for the next bit of time here, I think we can party a little bit, right? Big tech's looking good. Russell's going to likely come back to life. Consumer in a better spot. So we can party for a little bit in the short term. But I think the jury's still out if we look a little further out. People have been off in regards to their timing significantly in regards to this market and kind of their expectations about when the crash is going to happen, when the economy is going to go bad and those sorts of things. They've been way off in regards to all that. And we know that, certainly, right? Because the call was for 2022 massive recession, then it was 2023 massive recession, then 2024, right? And people kind of got to keep pushing this out. I think if Trump wins, you have debt euphoria come in the market, consumers in a better spot, inflation's dead, right? And we're going in a Fed cut cycle. I think you could have some euphoria that really comes over this next 6 to 9 months, and I think you could eradicate basically everybody that's got the bearish case, right? I think you could eradicate the bear case completely. I think you could eradicate all these folks that the recession. And that's a moment I get scared. That's a moment I get really worried. And that could come in the next 6 to 9 months. So after that, then I'm like, ooh boy, okay, no one's calling recession anymore. No one's calling bear thesis. Everybody's feeling good about the market. Everybody's feeling like, okay, it's an investable time. That's when I start to get concerned. And especially if I get confirmation that maybe inflation starts spiking back up in the summertime next year, along with, let's say, new home order numbers that are weaker, then we can talk. But until that happens, party on. All right, guys, much love as always. Appreciate you joining me. Always money to be made in the market, whichever way we're going, folks, okay? If you want access to all my premium courses, Become Master Stock Market Millionaire Playbook, Stock Options Mastery, Dividend Investing Mastery, if you want access to my private Discord community, see the moves I'm making each week, all that good stuff, including I made a bunch of moves here today. Click the pinned comment down there, fill out an application. We'll see if we can get you access to all that either this weekend or probably like next week, okay? Much love and have a great day.